BigBear.ai just reported Q3 earnings today and announced they're acquiring StockSausage for $250 million, a fast-growing generative AI platform built specifically for defense and national security. StockSausage is doing approximately $25 million in ARR this year, which is 6 times their 2024 revenue, and they're supporting over 100,000 users across 16,000 government teams. This is the strategic move that positions BigBear.ai as an integrated AI platform for the defense market right when government AI spending is about to accelerate. This isn't financial advice, just breaking down what came out today and why this matters. Do your own research, and let's start with the acquisition, because this is what changes the trajectory. StockSausage is a turnkey generative AI platform that's already in production at scale in defense and national security environments. That's not vaporware, that's live deployments with over 100,000 users across 16,000 government teams and hundreds of commercial companies. The platform handles secure distribution of AI models and agentic AI capabilities, which is exactly what defense and intelligence agencies need but can't get from commercial AI providers like OpenAI or Anthropic because of security requirements. Government agencies can't just plug ChatGPT into classified networks. They need AI systems that meet DoD security standards, run in air-gapped environments, and don't leak sensitive data to external model providers. StockSausage solves that problem by providing a platform that lets agencies deploy AI models securely while maintaining full control over data. BigBear.ai is paying $250 million for the whole business, and StockSausage is projected to do $25 million in ARR this year, which puts the acquisition at roughly 10 times ARR. That's expensive but not crazy for a high-growth AI software business, especially one that's scaled 6 times year over year and has strategic value in a market where BigBear.ai already has relationships. For context, enterprise AI software companies with strong growth and government customer bases typically trade at 8 to 15 times ARR, so this acquisition multiple is within that range. The CEO said they're creating what the market has been asking for, a secure, integrated AI platform that connects software, data, and mission services in one place. By integrating StockSausage with BigBear.ai's existing decision intelligence solutions, they're building a comprehensive AI stack for government customers that goes from raw data to AI-powered insights to mission applications. The acquisition is expected to close late fourth quarter 2025 or early first quarter 2026, so it won't materially impact 2025 financials, but it sets up 2026 as a different story where they'll have the combined ARR from both businesses hitting the income statement. Now, the Q3 results, revenue was $33.1 million, down 20% year over year from $41.5 million. That's driven by lower volume on certain Army programs, which is the direct result of the government shutdown delays that impacted contract awards and spending. Gross margin compressed to 22.4% from 25.9% last year because the higher margin programs from Q3 2024 didn't repeat in Q3 2025. Adjusted EBITDA was negative $9.4 million compared to positive $0.9 million in Q3 2024, primarily driven by the decreased gross margin plus an $8 million increase in SG&A. The SG&A increase was from marketing, non-recurring strategic initiatives, and labor costs as they're investing ahead of growth. On a GAAP basis, they actually posted net income of $2.5 million versus a net loss of $15.1 million last year. But that's almost entirely due to non-cash derivative accounting changes related to their convertible notes and warrants. The adjusted EBITDA tells the real operating story, and that deteriorated quarter over quarter. They maintained full-year guidance at $125 to $140 million, which implies Q4 needs to come in strong to hit even the low end of that range. The backlog is $376 million as of September 30th, which provides visibility, but converting backlog to revenue depends on government spending patterns. Here's why the bull case still makes sense despite the near-term revenue decline. The cash position is $456.6 million as of September 30th, which is a record and up from just $50 million at the end of 2024. They raised over $600 million through at-the-market equity offerings during the first 9 months of 2025, so the balance sheet is fortress-like. That cash gives them the ability to do strategic M&A like the StockSausage acquisition without taking on debt or meaningfully diluting shareholders at current valuations. The CFO explicitly said they're executing an M&A strategy to drive rapid growth, and this acquisition is the first major move in that playbook. The government shutdown that caused Q3 delays is temporary, and the CEO specifically mentioned that they expect opportunities, including accelerated spending from the One Big Beautiful Bill, to materialize into contracts next year. That's a reference to potential consolidated appropriations legislation that could unlock defense and border security funding. Border security and defense are priorities for the current administration, and BigBear.ai is positioned to benefit from that spending. The defense industrial base is being modernized with AI, and every major defense program is incorporating AI components, from autonomous systems to intelligence analysis to logistics optimization. Having a secure, integrated platform that can deploy generative AI and agentic capabilities at scale is exactly what's needed, and there aren't many companies that can deliver that for classified environments. StockSage's 100,000-plus users and presence across defense and national security agencies gives BigBear.ai immediate scale and credibility in the generative AI market. The agentic AI capabilities are particularly important because that's where the market is heading. Not just AI that answers questions, but AI agents that can autonomously perform tasks, orchestrate workflows, and make decisions within defined parameters. If BigBear.ai can successfully integrate StockSage and cross-sell to their combined customer base, they're set up to capture a significant share of government AI spending as it accelerates. The challenge is execution. They need to integrate StockSage successfully, which means combining technology platforms, sales teams, and customer relationships without disrupting existing deployments. The revenue decline in Q3 shows they're vulnerable to government spending timing, and if the expected 2026 spending acceleration doesn't materialize, they'll have trouble growing into their valuation. The adjusted EBITDA deterioration is concerning because it shows they're burning more cash while growing slower, which is the opposite of what you want to see. The SG&A increase makes sense if they're investing for growth, but only if revenue actually accelerates in 2026. At a $250 million acquisition price for $25 million ARR, StockSage needs to continue growing aggressively to justify the multiple. If growth slows post-acquisition, that becomes a problem. The defense AI market is heating up with competition from established defense contractors, big tech companies trying to get into government, and other AI startups. Palantir is the obvious competitor. They're already embedded in defense and intelligence. They're doing generative AI capabilities, and they have way more resources. BigBear.ai's advantage is being a pure play defense AI company without the baggage of being associated with commercial tech, but that only matters if they can execute faster and better than competitors. What makes this interesting is the timing. If you believe that government AI spending is going to accelerate in 2026 because of defense priorities, border security mandates, and the One Big Beautiful Bill that the CEO referenced, then BigBear.ai just positioned itself right before that wave hits. The StockSage acquisition brings immediate ARR, a proven platform, and 100,000 plus users that can potentially upsell into BigBear.ai's broader product suite. The $456 million cash balance means they can weather near-term volatility and make additional acquisitions if opportunities arise. The $376 million backlog provides some revenue visibility, and the defense AI market is genuinely massive. Every agency is trying to figure out how to deploy AI securely, and commercial solutions don't meet security requirements. The bear case is that Q3 showed revenue going the wrong direction, margins compressing, and EBITDA losses widening. If 2026 spending doesn't materialize as expected, they'll have paid a premium for Ask Sage while their core business is struggling. Government contracts are notoriously lumpy and unpredictable, but if the bull case plays out and government AI spending accelerates into 2026, while BigBear.ai successfully integrates Ask Sage and cross-sells to their combined customer base, this sets up for significant growth. The next few quarters will tell us whether this acquisition was strategic genius or an expensive bet that doesn't pay off. This isn't financial advice, just walking through what they announced today and what it means for the business. Drop a comment and let me know what stock you want analyzed next.